Aotearoa, and welcome to Wednesday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. Inflation spike fear is gripping financial markets as equities fall, bond yields rise, and some key commodities like oil prices are spiking. And there is a sharp move towards perceptions of financial safety, which is hurting commodity-based currencies like the Australian dollar and the New Zealand dollar. The fear is based on seeing central banks hiking policy rates to weigh against a looming inflation spike, just when economic activity is likely to weaken sharply on the consequences of Trump's wars. The fear is stagflation on steroids. It is affecting investors from New York to Shanghai, and now Trump is blaming friends, Spain and the UK, for not being supportive enough and threatening new trade restrictions. But it isn't universal yet anyway. First up today, there's been another very good dairy auction overnight, the fifth positive one in a row, delivering prices overall up by 5.7% in US dollar terms. With a falling New Zealand dollar, prices are up 8.4% in New Zealand dollars. Our charts tell the story overall and in product detail. Basically, prices are now back to the high of 2025 levels in both US dollar and New Zealand dollar terms. Yes, analysts will be reaching for their pencils to reassess the season's payout forecasts, although we should caution that we are well past the peak of the milk flows, and that volumes offered and sold overnight are falling away seasonally. More broadly, in the US overnight, the February US Logistics Managers Survey showed pressure on their system with rising inventories and strained capacity. Meanwhile, the Real Clear Markets TIPP Economic Optimism Index retreated in March from February and delivering a decline when a rise was expected. This is largely because personal investor sentiment fell sharply as confidence in US government economic policies slipped away. In the Middle East, only one tanker, a Singaporean one, has managed to traverse the Straits of Hormuz in the past day. It's essentially closed still. Insurers have cancelled policies. Now the US said is considering providing that at taxpayer expense. The costs of war are broad. And the scheduled meeting between Chinese President Xi and US President Trump is still on for the end of March. Given the unhinged policy making out of the US, it's a lottery on how this will play out. Trump will undoubtedly look for short-term face-saving wins. Xi will be playing a much longer game. Meanwhile, China is putting the finishing touches on its latest 5-year plan. We're approaching the rubber stamp set piece. In Europe, the euro area inflation rate rose to 1.9% in February, up from 1.7% in January. Although minor, it was an unexpected rise, and that pushed up core inflation to 2.4% in February. Given the global rise in uncertainty and the US-Israel-Iran crisis pushing up their energy costs very sharply in the past few days, these inflation levels are unlikely to stay this low in March, giving the ECB a new headache. In Australia, total residential building consents fell at a 7.2% rate in January, following a 30.7% drop in December. Year on year, it's down 15.7%, the largest fall since late 2023. This may have ended the rising trend of approvals that started in July 2024. But there were 9,900 detached houses approved for construction nationally, a 41-month high. The big shortfall is in intensive housing. Australia's current account balance fell by $2.8 billion in December to a deficit of $21.1 billion overall. This is the second consecutive fall driven by a net primary income deficit widening. This will take 0.1 percentage points from the December GDP result, which will be released later today. In public comments yesterday, the RBA governor acknowledged the sudden increase in uncertainty in the global economy on top of the already high uncertainty from Trump's abandonment of the international rules-based order. She said, quote, "A supply shock could, for example, add to inflation pressures, and the potential implications for inflation expectations are something we are very alert to. But at the same time, a prolonged impact on energy markets could have adverse impacts on global economic activity and result in a downward pressure on inflation. It is not obvious how this will play out," unquote. Westpac says Brent crude at $100 a barrel is entirely possible in the coming weeks. The US Treasury 10-year yield is now just on 4.06%, unchanged from yesterday, although it did get up to 4.11% in between. And the price of gold will start today down $179 from yesterday at $5,117 an ounce. Silver is down another $4 at $83 an ounce today. American oil prices are up $5.50 at just under $76 a barrel, while the international Brent price is up the same to be now just over $82 a barrel. These are 7.5% rises. A collapse in Iranian oil production could have quite deep impacts. And the Kiwi dollar is now another 50 basis points lower against the US dollar from yesterday, now just on 58.8 US cents. Against the Aussie, we're down 10 basis points at 83.8 Australian cents. We're down 60 basis points against the yen. Against the euro, they were unchanged at 50.7 euro cents. That all means our trade-weighted index starts today down 40 basis points and just on 62.5 and a new one-month low. And the Bitcoin price starts today at $67,575 and down 3.2% from this time yesterday. Volatility over the past 24 hours has been moderate at just under plus or minus 2.6%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. We'll do this again tomorrow.